So in last night's game plan, I gave you a list of key oversold levels to be buying the dip on the SPY, as the focus was, since we were having such a massive gap down, to be buying call options at the oversold key levels if you're seeing bullish 30-minute candlestick confirmations at those overall oversold levels. So the SPY did end up having a bullish recovery like I was expecting. And in terms of where we stand for here, I'm going to be breaking down the newly updated price action analysis. So like I said in last night's video, the only level of interest to be buying put options was at 608. We have a gap that's waiting to fill above at 608. That is going to be the main level of interest to be buying put options heading into this week. Now, this is what I have to say about the SPY. In terms of the daily chart pattern, we are setting up currently for an overall bullish week. As of recently, and if you study historically, right, whenever the SPY has this big gap down and we form this big green bullish daily candlestick, it tends to have an overall bullish week, meaning there's going to be oversold dip buying opportunities, and then there's going to be opportunities to buy at higher resistance levels using the break and retest strategy. In terms of the focus, whether to be going with the break and retest strategy to oversold levels, if we are gapping up and opening up higher than the previous closing price, we're going to be more focused on going with the higher levels rather than the oversold levels. If we're not gapping up, opening up flat, if the previous closing price is reacting as a resistance level, if the previous day highs are reacting as a resistance level, then we'll be focused on buying call options at the more oversold levels. If you take a look at this daily chart pattern, you're going to see right here, this daily candlestick right here looks just like this daily candlestick right here. And in terms of the overall week, it was a very bullish week. This daily candlestick right here looks very similar to this daily candlestick, overall bullish move, right? In terms of the similarities between these two daily candlesticks, you can see there was a massive dip buying opportunity. There was a massive dip buying opportunity. So if we are dropping below that previous closing price, there's going to be a strong dip buy heading into tomorrow. If we're gapping up, we're going to look for the break and retest levels. Even if we gap up and it flips bearish, we'll still be focused on those oversold levels as well, right? So if you just study historically on the daily chart, whenever it forms this similar gap up, this is another situation right here, very oversold, green bullish daily candlestick, and then it continues to go overall bullish, right? Continues to go overall bullish. This is the gap and go situation. This daily candlestick right here looks identical to this daily candlestick right here. If we gap up the next day, gap and go, bullish week, gap and go, bullish week. There is also a gap that is waiting to fill above at 607.90. So in terms of the curriculum and the unique trading strategy that I've created, one of the strategies is called a gap close reversal. In last night's video, I told you, since the SPY is having a massive gap down, I'm going to be focused on buying call options at the oversold levels. And I gave you a list of levels. And what you're going to want to do is you're going to want to use the 30-minute candlestick confirmations, the perfect chart patterns, along with whatever it is that you use to confirm if a level is bullish, to decide which one you're going to go with, right? So in terms of the overall levels, man, the most oversold one was the absolute bottom. This was the lowest level I gave you, and this was the gap, right? So if you disable extended hours, you can see it clearly. But in terms of the chart, that's what the white line represents, the previous closing price. But you can see right here, man, there was a gap that was waiting to fill below at 591, right? So once that gap ended up filling, the SPY ended up having a reversal during the extended hours trading session, right? And you could see, man, just all of these bullish 30-minute candlestick confirmations. There was resistance at 594. We had a break above 594, a retest, a new higher floor, which means it's a bullish overall trend. Unfortunately, in terms of the overall market's price action today, the vast majority and the best moves were literally just during the extended hours trading session, right? Which is not going to be good for options traders. In terms of today's overall price action, it was like a drought. It was extremely choppy, and the moves weren't that big. I mean, we had one big move here at open, but that was pretty much about it. And then we had one nice move right here. But anyways, man, very choppy day. And in terms of the levels that we opened up at, they weren't the best levels to be buying calls. You guys know I wanted calls at 599, but it's just like we went all the way down to 591, which means, buying calls at 599 the same day, it's not going to be as ideal. So it was just more of a choppy and trading overall day. But in terms of where we stand, man, bullish daily, bullish overall week, buying oversold dips, and break and retest strategies, right? So if we just break down the chart here for you, this is what you need to understand. The SPY is reversing at the gap. The gap is at 591.60. We are currently reversing at the gap. There's a gap that is waiting to fill above at 607.90. Based off the daily chart pattern, we are not only in the process of having a gap close reversal at 591, where SPY closes this gap and reverses the gap, but we're also in the process of having a bullish overall move to close the gap here at 608, which could happen as early as the end of this week, right? Now, in terms of the levels, this is what I want you to understand. If the SPY gaps up and we open up higher than the previous closing price, the focus is going to be to buy call options at the higher levels using the break and retest strategy. If it doesn't work out, along with the confirmations, still going to be interested in buying call options at the oversold levels. So in terms of the break and retest levels, if the SPY is gapping up, these are going to be the following levels. So we ended up closing at $599.37. If we're opening up, ideally above $600, these would be the main levels that I'm going to be focusing on. This 602 to 601.50 zone, that's going to be an interesting zone to watch, right? If we start breaking above 602, we're going to be trending up into that 603 to 605 overall range, right? So 603 to 605 overall next range, right? So in terms of break and retest levels, these would be the main levels, man. This 670, 670 to 650, and 601.50 to 602. Next level above that is 603. So I'm going to be watching those resistance levels. If we are reacting bullish, breaking out, dropping back down, retesting, forming a floor on the 30-minute chart, right? So in terms of a great pattern, this is a great example right here. There's resistance at 594, break above resistance. Right here, this 30-minute candlestick forms a higher, it closes above the previous 30-minute resistance. Higher floor, it's holding for hours, buy calls, boom, breaks out, right? So if we see some sort of bullish break and retest pattern forming at that 601, 601.50, 602, levels I gave you, then we're going to be buying call options, right? So those are going to be the break and retest levels. In terms of the overall ladder, very, very simple. Previous closing price, $599.37. Next level above that is mainly going to be this 660 break and retest level. Next level above that is going to be 601.50 to 602 zone. Next level above that is going to be 603. Next level above that is a wider range, a 2-point range, 605. Next level above that is going to be 608. Want puts in between 608 to 607. Previous supports react as a resistance with a gap close reversal trading strategy if we're seeing bearish red 30-minute candlestick confirmations. Now, if we're not gapping up, or if the break and retest strategy isn't working, then oversold levels on the call options. So if we're not gapping up, if we're opening up flat, if we drop below previous closing price, you can try a scalp on puts if the confirmation is there. So if we're opening up flat and the SPY's reacting bearish, you can try put options towards the previous closing price, right? So in terms of like what you need to understand with this whole situation is, if we are opening up flat, you can see right here, man, 599.32. If we're opening up flat and we start going on the previous closing price, we're reacting bearish. That could be the one trade besides 608 where you can try put option, right? So if you're seeing resistance form towards that previous closing price, what's going to happen is we're going to start to drop back down to the following next level, which is going to be down here, 597. Now, if we're reacting bearish towards that previous closing price at 599.37, you could try to scalp on puts. It could possibly be against the trend. So get in, get out, make your quick profit if the perfect confirmation is there. But what I want you to understand is there will be an oversold dip buying opportunity based off the daily chart pattern. What I would focus on is not necessarily towards the previous day lows. I would focus on slightly above that, more towards like the middle. So what I would say is like 596. 596, 596.50 call options. That's going to be an oversold level to consider buying call options heading into tomorrow. Slightly under 597, and one of the best levels would be 594.50, the previous day lows. That's going to be the game plan, man. If you're seeing the previous day highs and the previous closing price reacting bearish on a flat open, scalp the puts. Look for call options slightly above the previous day lows. The previous day lows is at 590, is at 500 and 595, 594.64. So you can look for a dip buying opportunity, like 2 points above that, right around this mid 596 support level. That's where I'd focus on calls. Next level for calls under that is going to be 594.80. Next level for calls under that is going to be 592.40. Based off of what the chart and pattern is saying is, if the SPY does react bearish at previous closing price, scalp the puts. And then you're going to want to buy call options towards this 596.50 level. And then if it goes under that, buy call options, previous day lows, 594.60. That's the game plan, man. Very, very simple. If you use this game plan, you should have a phenomenal green day headed into tomorrow. So again, when you're using this price ladder, make sure that you are not just blindly trading a strategy, right? So in terms of strategies, there's a strategy right here at 608 where it could reverse at the gap. And there's a strategy right here where this is previous support that was not tested. Once it spikes back up, it could react as new lower highs, react to the resistance, start to pull back. Two strategies in one. But make sure when you're trading the ladder, you never blindly trade based off of a strategy. A strategy can be a foundation, a key level could be a foundation, but always use a confirmation. Use the 30-minute chart to confirm if it's reacting bullish or bearish at the level, at the ladder, or even better, at the level, at the ladder, at the strategy. There's not going to be strategies at every single price in the ladder. Some of them are just going to be simple prices, right? But I'm telling you, man, daily chart foundation, we're going to be setting up for a very easy trading day tomorrow, in my opinion. And it's going to be a lot better than it was today, man. In terms of today, this was just very, kind of unfortunate, especially for options traders, man. I mean, that's frustrating when you're getting this massive volatile move and the move you're wanting to get in on is happening, during extended hours trading session right here. The best moves literally happen within the first 30 minutes, to early in the pre-market around like starting at 5:30 a.m. to the first 30 minutes. After that, it was just a choppy fucking drought. It wasn't the best situation, especially for farther money option contracts. I mean, in terms of like price action recognition, there's resistance here. There's a break above resistance. There's a retest. 30-minute candle closes above the previous resistance, which is all fucking bullish. There's a higher floor for fucking hours, and then it breaks out higher. The previous resistance level before that is now right here at 596.30. And then you can see there's a higher floor forming at 596.30. And then, you have these bullish 30-minute candlestick patterns. If you go back and you study the videos throughout last week, this same pattern ended up repeating where we had, this situation with this double red, double green, and then it just kept on doing the same thing. Double red, double green, double red, double green, double red, double green. It just kept on fucking doing that throughout the day. And then you could have stacked that with previous resistance right here, breakout, drop back down, higher floor, react to support, just like it did right here for an overall bullish continuation, to attempt to break out above the previous day highs. And then also the green, red, green worked as well. We had, this is the one I tell you all the time. So look at it like this way, man. Resistance is here. There's a breakout. There's a retest. And it pushes higher. This is all fucking bullish. And then you have a green, red, green. And look at the higher floor. The higher floor is forming slightly above this previous resistance, right? So that's more bullish. Green, red, green. And then a bullish 30-minute close breakout. So in terms of curriculum and what I teach, I mean, I would say it worked out fairly well. It's just like, in terms of today's chart, the main issues were the choppiness and the timing. It was not the easiest time to be timing. But in terms of like this pattern, I mean, the green, red, green, and then bullish move, that could have been timed fairly well. But I mean, the patterns were there. The break and retest were there. The levels were there in a sense. But the problem is a lot of it played out as well during the extended hours trading session, which made things difficult just with this fucking chop, man. It's like the real moves we wanted were just like directly at 30 minutes and open, and then during 5:30 a.m. up until 10 a.m. Those were the main moves. But I mean, this could have been a nice, this green, red, green, previous resistance, reactive support. But I'm telling you, man, overall, it's just the price action today was very, very shit, slow and choppy, like a fucking drought. It just wasn't a good day to be trading. I mean, in terms of how we did, GWAR went like 1 for 2. It wasn't, anything great in terms of today's trades. In terms of my trades, I went 0 for 3. This was definitely not my day. But I'm telling you, based off of how we're setting up for tomorrow, along with, if you look during extended hours, we're not getting like this massive fucking move. So, I mean, it should be a lot more volatile heading into tomorrow. If we're getting this massive fucking move and then extended hours dries up, typically after that, you'll start to see bigger fucking moves. And based off of what I'm seeing with the daily chart pattern, this should be fucking phenomenal, man. Gap up, break and retest. If we react bearish with a flat open, puts towards open, and then the calls towards the middle of the day price, towards this like 596.50, right around this zone. And then you can keep it on previous day lows. It might not retest, but I'm telling you, calls at those fucking oversold levels if we're reacting bearish. And then if we're acting bearish, you could try to scalp puts against the potential trend. It's like tomorrow should be a lot more simpler and easy to trade, and the volatility should be there throughout the day rather than, just during extended hours and then just a choppy shit day. I'm telling you, if we gap up, it's going to be a nice gap and go move. If we're flat, it's going to try to drop first and then spike back and recover. And it should be a lot more volatile. So again, this was a very, this was definitely a more difficult day to be trading. But yeah, that's today's analysis in terms of the SPY. That's the overall game plan. You guys let me know in terms of like how you do using this game plan in terms of being self-sufficient. Let me know how you do tomorrow. Now, with that being said, if you guys do want to join our community and gain access to a zero-date options trade alert system, is going to be the first link down below within the description. Hold up, I gotta silence my money printer real quick. I get all these notifications of this fucking money coming in. But anyways, man, in terms of, like I was saying, the zero-date options trading alert system, if you do want to gain access to that, it's the first link down below in the description. What we do is we buy cheap, low risk, far out of the money option zero-date contracts. And we're known for selling them deep in the money for the biggest percentage gains. And we have the highest win rate in the game doing this, right? So in terms of Team Roar, we are ranking in the top fucking 50 world fucking wide on WAP. There's over 11,000 fucking groups on WAP. We're ranking top 50 literally every single fucking day. In terms of the options category, we're ranking like top 3 out of all the options fucking groups. So if you're looking to join the best in the fucking game, because I'm telling you, man, in terms of the trades we're making, you're not going to see anything else out there like this. And like I said, very, very cheap, very, very low risk. In terms of the system, we do not use stop losses. We do set profit stops. We put in our entire position size as our max risk per trade. And we don't set fucking stop losses. If the trade expires worthless and goes to 0, then we lose on the trade. If the trade never goes green, then we lose on the fucking trade. If the trade goes green, we set a profit stop. When we're up like 15%, get stopped out for profits. Add to the position to increase the winning and move the profit stop up higher to ensure that if the market doesn't move against our trade, we don't get back the bulk of our profits and we get stopped out for the majority of our profits, right? So it's a very unique zero-date options trade alert system that can consistently make you money. We have many members who use our format and they make $500 to $1,000 a day. Some members are making 5 figures a week. Some are making 6 figures a month. We have multimillionaires within our secured private organization, right? So it's the first link down below within the description. If you would like to join us, you gain access to our community and you also gain access to a zero-day options trade alert system. You gain access to our trades. It's the first link down below if you would like to join us. With that being said, I'm going to be signing off and I will see you guys within the chat from here, within the community. I will see you guys from here.